There is so much fear and talk about inflation and interest rates in the current market that it is driving me insane. So when I came across an incredible article looking at the last 50 years by Simon Priestley, I thought I'd break it down for you so that you can see what's happened and what may come in the future. Now, in the period between 1970 and 1980, interest rates sat between 6.5% to 10%. Now, during that period, inflation was between 5 and 17%, and house prices across Australia on average grew by 282% in a decade. Now, the next period Simon looked at was between 1980 and 1990. Now, during this period, interest rates sat between a whopping 10 to 17%, and inflation sat between 5 and 11%. During that 10-year period, house prices grew by an average of 158%. Now, one of the main parts of the narrative in the media at the moment is that we need to get inflation under control and higher interest rates are killer. And for some households, including my own, it is really difficult at the moment. But to draw a direct correlation between the interest rates of the day and the inflation rate of the day and then what ended up happening over a decade on property prices is madness. Now, in the years between 1990 and the year 2000, when we had the dot-com boom and bust, interest rates sat between 17 and 6.5%, and they did finally get inflation under control after a 20-year period of craziness and got it back in the 1 to 7% range. Over this period, which was also coming out of a GFC, we saw house prices increase in Australia by 72%. Now, the period between the 2000 Olympic Games in Sydney and the GFC in 2010 saw interest rates start off low, and as we got closer to the GFC, rise extremely quickly. In fact, as we got closer to 2010, interest rates went up almost 22 times in an extremely short period. Now, this was a great decade for inflation where they managed to keep it within the 2 to 4% range, and we saw house prices across Australia, which was important because this was the second half of a real estate cycle, go up 146%. Now, for the period coming out of the GFC up until the mid-cycle slowdown or COVID, we saw interest rates sitting between that 5 to 7.8% mark and inflation being extremely well taken care of at the 1.5 to 3% range, which must have made the Reserve Bank feel amazing. Now, over that particular period of time between 2010 and 20, we saw house prices across Australia go up by about 48%. Up post 2020 in many locations, we've seen at least another 40% price growth on top of that. Now, nobody has a crystal ball, and anybody tells you that they know what's coming next has no idea what they're talking about. Whether that's the Reserve Bank, Australia's biggest banks, biggest analysts, or biggest property people, none of us have a clue. And so your job as an investor, as is mine, is to look back at what's happened previously and then make the best decisions we possibly can moving forward. Regardless of where interest rates, inflation, or property price growth has been, anybody that bought a property at any point in the last 50 years in Australia has done extremely well. In fact, when I look at what Simon Priestley said when he looked at 50 years of Australian property data across Australia's 8 capital cities, the average return on a house has been more than 8% per annum. This is absolutely exceptional, especially on leveraged money. And if I could get half of that longer term, I will end up financially free and in an incredible position for myself and my kids. If you guys haven't already done so, please give this video a thumbs up. Please subscribe to the channel for heaps more ideas like this, where we look at the history, we look at the present, and we look at the future around Australian real estate and hopefully help each other make better decisions.
Woo! That's a wrap.
That's a wrap.
Getting cool, bro. Yeah. Oh, sweaty. So sweaty. Oh, that's good. Look at that. So nice, eh? Oh.